I think the global financial markets are extremely focused right now on the U.S. negotiations. The risk of a U.S. default is the overriding concern in global financial markets this week, and so everyone's desperate to have a deal on the table before October the 17th. But from a medium-term perspective, clearly the Chinese trade data was very worrying in terms of the very weak export data, although there was a bit of comfort on the import side that momentum in the domestic economy is clearly still holding up. I think there were some special factors in the China export data. The timing of the Mid-Autumn Festival was one of the factors that could have played a part in that, and potentially also some of the issues around over-invoicing of exports that happened towards the end of last year. But nevertheless, this is clearly a very weak number, and we'll need to look at what happens in the October data and whether there's a bit of a pickup.
Yeah, that's right, Rajiv. A lot of people have said that we have come off a pretty high base last year, so in comparison, this year might look, or this month in September might look pretty weak in comparison to the rationing up of receipts in September last year, just around 12 months ago. So what about China? Does it still grow at 7.5% this year?
I think we're looking for slightly over that number. We're expecting the third quarter GDP data to show something of a pickup. We thought the second quarter data, which came in at 7.5% year-on-year, was probably the low point. So we're looking for about 7.7% year-on-year in the third quarter, based on the improving momentum in the domestic economy that we've been seeing, and also industrial production has been improving slightly. So we're looking for slightly over that sort of 7.5% growth limit.
Okay. Well then, Rajiv, what about the U.S. then? Since we have 4 days to go before we hit the October 17th debt limit, are you confident that a deal will be struck before then?
I think there's mounting pressure on Congress to come to a deal. Clearly, the risk of a default in U.S. sovereign debt is a very negative scenario for global financial markets and would cause turmoil in markets if it were really to happen. And from the Asian point of view, would obviously create a lot of disruption in Asian emerging markets in particular. So I think as we move towards that 17th deadline, we're going to see tremendous pressure building for a deal to be done. I think the makings of a deal are now on the table. It's a question now about how long is the timing of this temporary extension that seems to be what's being offered. And I think President Obama is pushing to have this beyond the sort of holiday season.